Hello friends, welcome back. In our last video session, we discussed on stability strategies like no change strategy, profit strategy and pause or proceed with a caution strategy, along with the objective behind these strategic decisions and suitable examples for each of these stability strategies. In this video, we will be discussing on those corporate level strategies which may be formulated during the declining stage of industry life cycle or in the introduction stage of the industry life cycle where the external environmental factors are unfavorable. Let us discuss what retrenchment strategies are, what are the types of retrenchment strategies and their related examples. So, let's begin. Retrenchment strategies are approaches businesses adopt when they need to reduce or withdraw from underperforming segments or markets to improve overall profitability and focus on core operations. Retrenchment strategies are used by companies to reduce the scale or scope of their operations, often in response to financial difficulties, market downturns, or to streamline their operations. They focus on minimizing the cost, cutting down excess resources, or completely withdrawing from unprofitable segments. Retrenchment strategies aim to stabilize a company's financial health and reorient it towards more sustainable growth. On the industry life cycle, when the industry is on the declining stage or introduction stage where the product or the company is underperforming, firms prefer to go for retrenchment strategies. There are three types of retrenchment strategies such as turnaround strategy, divestment strategy or liquidation strategy. Let us understand each of these strategies one by one with suitable examples. In a turnaround strategy, every firm aims at reversing their poor performance. The turnaround strategy involves improving operational efficiencies, cutting costs and refocusing on key profit areas to restore the company to profitability. For example, Tata Motors. Tata Motors implemented a turnaround strategy for its domestic business by cutting costs, focusing on customer needs and revamping its product lineup. This included withdrawing from some underperforming international markets and focusing more on the Indian market with new fuel-efficient models to attract consumers. ITC, traditionally known for its tobacco product, faced a stagnation in its core market due to increasing regulatory challenges, health awareness campaigns and changing consumer behavior. And hence, company diversified into fast-moving consumer goods sector. It expanded into food, personal care and lifestyle products under its Ashirwad brand, offering products like packaged foods and edible oil. The company embraced sustainability as a core part of its strategy, investing in environmentally friendly practices like water conservation and sustainable sourcing of materials. ITC also introduced innovative products such as Bingo snacks and Vivel skincare and invested heavily in brand building and advertising. Thus, this ITC's diversification strategy paid off and it became one of the leading FMCG company in India, reducing its reliance on the tobacco business and achieving strong revenue growth in its new segment. Here we can take one more example. Bharti Airtel, one of the India's largest telecom companies, faced severe competition after the entry of Reliance Jio in 2016. Prior to this, it was struggling with rising debt, declining ARPU, that is average revenue per user, and operational efficiencies. So the various turnaround strategies implemented by Airtel are cost reduction. Airtel focused on reducing the cost by improving operational efficiency and optimizing its infrastructure. Second was network expansion. It invested in network expansion to improve 4G penetration and increase its data services revenue. Third is strategic mergers and acquisitions. Airtel entered into a series of strategic mergers and acquisitions, including the merger with Telenor and Aircel to consolidate its position into the Indian market. And the outcome of all these strategic decisions, Bharti Airtel successfully managed to retain its position as a leading telecom operator in India, despite intense competition from Jio and other players. It managed to turn around its financial and maintain market leadership position by focusing on 4G services and customer-centric strategies. Next is the divestment strategy. Under this strategy, the firm focuses on maximizing the profits from its current resources and operations. The company may make efforts to reduce cost or increase the profitability within the existing scope, but it avoids any major investment in growth strategies. For example, Reliance Industries used a divestment strategy by selling its stake in US shale gas business. The shale gas investment became a non-viable over time, and Reliance refocused on its core businesses in refining, petrochemicals and telecommunication. In 2014, Reliance Industries decided to sell its stake in these shale gas assets to EOG Resources for nearly $1.5 billion, focusing back on its core businesses of petrochemicals and telecommunication. Larsen and Turbo, the sale of L&T Finance and other non-core assets. A leading infrastructure and engineering conglomerate in India, L&T wanted to focus more on its core business of construction, engineering and infrastructure development. It had several subsidiaries and non-core businesses including financial services that were consuming significant management attention and resources. So the divestment strategy adopted by L&T is sale of L&T Finance. In 2017, L&T announced the sale of a controlling stake in its non-banking financial service company, that is L&T Finance Holding, to Birla Sun Life Insurance, which is now called as the Aditya Birla Capital. This was part of a larger strategy to focus on the company's infrastructure and engineering sectors. The divestment of other non-core assets, like company has periodically sold non-core businesses including some in IT, services and manufacturing to concentrate on its engineering and infrastructure portfolio. And because of this divestment decision from financial services, L&T streamlined its business operations and refocused its capital on high margin infrastructure projects, which are the company's primary growth drivers. We can take one more example of Sahara India Parivar, sale of Ambi Valley project. A large Indian conglomerate was involved in multiple business sectors including the real estate, entertainment and finance. The company faced severe financial stress due to legal and regulatory issues, leading to a need to raise funds and reduce its asset base. In case of their divestment strategy, Sahara Group attempted to divest its Ambi Valley City, a luxury township project in Maharashtra, to raise funds for its other obligations. The project, which included real estate, resorts and commercial developments, was eventually sold to a consortium of buyers in 2020. The sale part of the broader effort to reduce debt and streamline the company's business, although the divestment process was complex and involved legal challenges. And lastly, we will be discussing on the liquidation strategies. When a business cannot be revived, liquidation becomes the strategy to exit completely by selling off their assets. This is typically a last resort strategy. We can take here the example of Kingfisher Airlines, which was launched by Vijay Mallya in 2005, was once one of the India's leading airlines. However, the company faced severe financial losses due to rising fuel cost, debt accumulation, operational inefficiencies and labor issues. By 2012, Kingfisher had accumulated significant debt and was grounded after failing to comply with regulatory norms. Attempts at restructuring and turnaround failed due to company's inability to pay off creditors. As a part of liquidation strategy, Kingfisher's assets including planes, office equipments and real estate holdings were auctioned off to pay off outstanding debts. The company also sold its intellectual property and trademarks including the Kingfisher brand. DHFL, one of the India's largest housing finance companies, faced a major financial crisis when it defaulted on debt repayment and was accused of financial mismanagement. The company was embroiled in a major financial scandal involving misreporting and failure to pay back loans to the investors and creditors. So, in case of their liquidation strategy, in 2019, DHFL was admitted to the National Company Law Tribunal under the Insolvency and Bankruptcy Code. The company's assets were assessed and sold off in a liquidation process to settle dues with the creditors. And DHFL's assets including its stake in subsidiaries, loans and other real estate holdings were also sold off to recover funds for the creditors. Now let us understand why to formulate the retrenchment strategy. The first thing is for resource optimization. Retrenchment help organization to focus their resources on profitable areas, enhancing efficiency. By reallocating resources from unprofitable ventures, companies can invest more in growth-oriented segments. Second, for the purpose of financial stability. Companies facing financial distress benefits from retrenchment by cutting costs, managing debts and stabilizing the cash flow, which strengthens their position and prepares them for the future growth. Third is adapt to market conditions. In the dynamic markets like India, where economic conditions can shift rapidly, retrenchment allows businesses to adapt, protecting them from long-term impacts of unfavorable market trends. Fourth is refocusing on core competencies. Retrenchment strategies allow companies to shed non-core operations and focus on the core business areas that align with their competitive strengths and long-term vision. And lastly, to enhance the shareholders' value. When companies shed unprofitable units, it often leads to higher profitability and efficiency, which can improve stock performance and enhance shareholders' value over time. I hope you have understood what are retrenchment strategies, types, and when and why organizations are preferred to formulate the retrenchment strategies. In the upcoming videos, we will be discussing about the various strategic tools and important topics which are related to implementation of strategies. Stay connected.